Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's finally December. I can't believe it's the last month of the year. It's Friday, it's December 1st. I have no idea where this year has gone. If you ask me, I'm thinking February of 2023 still. It's been a really interesting week. It's been a very non-volatile week. I mean, actually, it's been kind of a volatile week, but it hasn't been a week where the market has gone anywhere. Matter of fact, if you look at the S&P 500, here's where it is all week long. And this day when we had this red candle here, it basically just gapped up and came right back down. Yesterday, same song and dance. Very uneventful, no directional bias, and volume is tiny. As a matter of fact, let's take a look at the volume so you could see exactly what I'm talking about. Volume is just starting to come back. Yesterday, the volume was about 83 million. But look at this whole week right here. Very little holiday volume. Finally, just now starting to come back. But again, we need to see volume above the average. This is the key. It has to be above the moving average. And as you can see, it's taking a little bit of a dump. Not surprising in light of the holiday season and in light of everything we're seeing on Wall Street and the world right now. Another thing you need to pay attention to is this. One of the biggest reasons why, if you look at the futures right now, you will see that the Dow is still holding up while the Nasdaq is struggling. One of the biggest reasons for that, and it's very important for you to understand why things are happening. Look at CRM. CRM gained about 10% yesterday. CRM is a Dow Jones stock, from what I believe. I think it's a Dow stock, from best of my recollection. It's definitely an S&P 500 stock, but this stock really gave the market tailwind yesterday. And the problem is the stock is already down a little bit today, and if we can't get that tailwind, it's very hard for the market to rally when stocks like Tesla, Microsoft, Intel aren't behind it. So it's very likely that we will see the larger cap tech stocks push the blue chip stocks lower, and we don't have CRM to come and save the day today. Also, look at the bond market. Yes, we went here, we got really happy. Interest rates are going to go down. They're going to go down. 50% as priced into the bond market, 50% chance that they're going to go down in March. Folks, if you think interest rates are going to go down in March, I'm not even going to start with you. I think that's like a pie in the sky. I mean, I think realistically, there's a chance of it, but I think it's more like 5%, 10% max, not 50%. So I think the market's getting a little bit, or the market got a little bit ahead of himself. I think you got some exuberant traders really putting in the best case scenario, and I just don't see that best case scenario playing out. But that's what's priced into the market. Why is that so important? Because if the market starts taking some of that back between now and March, and we don't have that much time, it's only 4 months. If the market starts taking some of it back, the market the bond market will start puking back a lot of these gains, because this is based on the fact that the bond market really believes that there's a chance, a 50% chance that's priced in right now into this bond market, that they're going to be in the 2-year, but this is the 10-year, but they look very similar, that the Fed is going to start lowering rates in March. And I think that's going to cause a big headache for the market, because as we get closer to March, the market's going to be saying, oh, wait a minute, we may be going higher, or we may be holding steady, but I don't think we're going lower. I think that's a little too ambitious, especially in light of the fact that we just now started seeing numbers become better. So yesterday we had a bunch of Fed speakers. We had the personal income. The big number there was the core PCE. PCE, very big year over year. They were expecting anything below 3.7. They got 3.5, right per expectation. Costs gave us a little tailwind, but not from the tech stocks. The tech stocks took away a lot of that tailwind. Look at the QQQ. It hasn't been doing all that great. And when I show you some of the tech stocks, it hasn't been doing all that great. It's now at the 8-day EMA. And if you look at some tech stocks, like for example, Microsoft, they've been really strong, right? Well, look at Microsoft the last 2 days, yesterday. That's not strength. Look at NVIDIA. I've been talking about NVIDIA. NVIDIA's got more downside to go. Not NVIDIA, Tesla. Sorry, I've been talking about Tesla. Look at NVIDIA. The 50-day and the 100-day moving average are not that far away. Tesla. I've been talking about Tesla, which is already down. Remember I told you if it breaks this level right here, it doesn't have any more, it has all the way to go all the way to 234? Well, guess what level it hit yesterday? Went all the way from here to here. And now it's at 235. It can actually go a little lower. And if it breaks the 50-day line right now, it's going to go all the way to 224. I don't know if that's going to happen, but it's very much a possibility considering we've been sitting at this area and hitting this area quite some time. But remember I told you, sell it right here when it crossed this level. I send you a telegram. Look at it right now, and it says, maybe the main telegram, not the day trading one, but I said, if Tesla breaks down, we're going to go there's no support all the way to 234. And guess where we're at right now? We're at 235.99. And overnight, we went all the way to 232. Okay? So things are not really all that peachy right now. They don't look all that fantastic right now. And I'd love to tell you they do, but they just simply don't. And if you look at all the sectors, look, real estate gapped up yesterday, closed down. Retail up and then back down. Everything closed lower. There's financials. Financials were the only thing. Financials and basic materials were the only thing that held up yesterday. But this does not look good. There's really no... Look, semiconductors gapped up yesterday, went right back down. Looks like they're going to start filling the gap. Communication service sector, all the way down here. Things are not looking all that great. Now, am I expecting doom and gloom? Am I expecting the market to... here, let me just go back. Am I expecting this market to fall apart and break down and do any of that? No. But it would be very healthy for us to have a little bit of a correction, just a little pullback, maybe to just a little bit between the area we're in right now and back to the 100-day or the 50-day. It would be very healthy, actually. Also, as I mentioned yesterday, the market is appearing to be heading towards a resistance level. This is a serious resistance level, and if we stay here, the odds are we're going to break back down and go to the 50-day moving average. So, again, I know this is a bullish period in the stock market history, but folks, we went 10% last month. The average gain in the stock market is 6.6% per year, somewhere in that ballpark, depending if you go back 30 years or 50 years. How far back, how much more do you think we're going to gain this year? So you got to be a little realistic here. All right, let's talk about global economy and talk about all the threats and opportunities. Now, there's no more earnings on the table. Big earnings are behind us. Even medium cap earnings are behind us. We only have small caps now. So today we're going to be looking at U.S. factory activity. These reports, by the way, they come out right here at 10 a.m. Manufacturing and then Fed speakers all throughout the day in construction spending. So don't you dare put on any trades before 10 a.m. because you're not really going to know what's going on till that time. Again, I'm trying to give you some perspective. Investors are looking ahead for comments from Jerome Powell for more clues about the path of interest rates, while gearing up for U.S. factory activity data, 10 a.m., and then Fed speaking all day long. Blue chips outperformed the benchmark, but CRM, this is what I thought, the Dow, yeah, it's in the Dow. CRM, because it was up like, 10%, 9% yesterday? So that gave the Dow a little bit of juice. Think about, take that away from the Dow, and what do you got? Downside market. So one of the reasons why blue chips were stronger yesterday, because of Salesforce. But Salesforce is a tech stock. Just between you and I, it's a retail stock, it's a consumer discretionary stock, and it's a tech stock, right? Because you need Salesforce to operate consumer stuff in big businesses. We used it last year. We used it for years. It's for big businesses. It's for commerce. If commerce is slow, Salesforce is slow. If commerce is good. So it's you got consumer discretionary, you got retail sales, and tech in this all rolled into one. So it's not up today 9%. It's actually down 2%. So instead of giving us some tailwind like it did yesterday, it can put us in the crapper. U.S. Core PCE Price Index. That was out yesterday. It was better than expected. Fed speakers. Now listen to this. And you tell me where it says here that they're going to lower rates in March. New York Fed President Williams reiterated Thursday that the Fed benchmark lending rate is at or near its peak level and said that monetary policy is quite restrictive. I expect it will be appropriate to maintain a restrictive stance for quite some time. Quite some time. That sounds like a while, and I think they should do it for a while, to fully restore balance and to bring inflation back to 2%. San Francisco Dolly said interest rates are in a very good place to control inflation, although she's not considering cuts, and that it was too early to determine if hikes are finished. Does that sound to you like a 50% chance of a 25% base cut in March. I'm just curious, what here leads anyone to believe that they're going to cut rates in March? Does this sound like it to you? Let's see here. Long run, sustainable, not considering cuts, and it'll be too early to determine if why is it 50%? Folks, when this backs up, it's going to bite us in the butt. Anyhow, Powell is speaking today throughout the day. Be careful. Put your Powell helmet on. Manufacturing PMI is due at 10 p.m. Europe is giving us a little tailwind. They're waiting for Powell, but mining stocks are leading the market higher. China closed higher, just above the flat line, pairing early losses following a report that unidentified state institutions bought exchange-traded funds. Okay, nothing really there. Japan not giving us tailwinds, closed slightly lower, posting its first weekly drop after 4 consecutive weekly gains. A private sector survey showed Friday that Japan's factory activity contracted at the fastest rate in 9 months, driven by sluggish domestic and international demand that squeezed firms' order books. We're not getting really much tailwind from the market this morning, and I already showed you that futures are down. They're down about, look at that. That's not good. I should have worn my bear shirt today. But the point is, I'm not seeing any rainbows and butterflies and crickets, and volume will probably be a little bit higher once again because folks are coming out of their holidays. Looking at the sectors, as I mentioned, not everything is looking all that great. If you look at the last 6 weeks, let's look at 6 weeks. If you look at the last 6 weeks, home builders, semiconductor technology, speculative. The last 3 weeks, home semiconductors are now coming down. Russell is now coming down. Communication, consumer discretionary, and tech are below. What about now? What about the last 5 trading days? Real estate, Dow Jones, basic material. This, folks, right here is extremely blue chippy right here. Retail, financial, industrial, consumer staples, healthcare. Look where the technology is. Communications, semiconductors, QQQ, energy, don't get me started, technology, and consumer discretionary. All the speculative goodies are at the bottom in the last 5 days. So right now, we're clearly seeing technology struggle. And we all know that the FANG stocks have a huge market cap. And if they start coming down, they may pull us down. Be very cautious today. In terms of the trades that I'm holding in the day trading room or active trading room, we've got a couple. We still have this one, LTHM. It's actually down today. We need the stock to break a little lower. We got in right here. We are in Morgan Stanley short. Financials have been really rallying, and I'm hoping that this will finally come down. If not, I'm going to get rid of it like right here. Just a little bit above this level, like right there. And the one that's giving me the biggest heartburn is this one. This one gapped down overnight. And it's finally starting to come back. Look at this. Let me show you. Yeah, look at this thing overnight. Dropped to 100. Now it's 105. I mean, this thing is extremely gappy. I shouldn't have got this stock. But if it breaks this level right here, let me show you. If it breaks this level right here, which it already looks like it's doing overnight, I'm going to get out of the stock. The only reason I wouldn't if it comes back up today. So this will probably be a cut. Again, just wanted to show you what we're holding. The rest were all winners. We closed them. That's all of the stocks in the last 2 months. These are the only, or the last month, the last 5 weeks. Those are the only stocks that we're holding, and they're losers. And 1.5 is going our way. So I'm pretty happy about that. I'm actually really happy about that, folks. Before I let you go, I'm fixated. Yes, I'm fixated. Not on Clyde. Not on Bonnie and Clyde, my cats, but I'm fixated on something called the infinite loop. And that's because it has the potential, still has me reeling. This is a market that's largely secret to the average trader. It's the biggest market in the world. But a master trader has cleverly engineered a robotic ally to do all the heavy lifting for him, helping you eye potential returns of 15 to 25% every single month. Forget the whirlwinds of crypto, the snooze fest of bonds, or the same old stock market been dragging its feet since last week. Haven't had a chance to check it out yet? It's a great time. Now's the time. Click the link below to uncover the extraordinary feats the Infinite Edge robot can achieve for you. Have a great weekend. If you need to send me an email, roger@rogerscott.com. Post comments below this video. Subscribe to our Telegram channel. All the links are below this video. If you don't know where to find this video, go to the YouTube channel, go to the search box, go to Roger-Scott, and it'll show up. Like, subscribe this channel, and you'll get these videos first thing in the morning. Have a great day, and we may need to put our bear helmet on at least for a little bit. I'll talk to you guys later. Have a great day. Bye.